Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So a lot of the companies that I own in this portfolio reported their earnings recently, and what we're doing now is going through every single one of the companies and of course sharing with you guys my opinion of what I think about the company in terms of buy, sell, hold, and what I'm going to do moving forward. And at the same time, we look at the financials, we look at what they've reported, and to see if, just to give you an honest opinion whether I'm actually going to sell it, but buy more, hold it, and so on. So if you're enjoying this type of content, please like the videos. It makes a absolutely huge difference. And at the same time, join us at the Patreon account if you can. It will cost you about 15p per day, and you get access to all of these things. You get access to the the private Discord where a lot of brothers are sharing very good practices. You got real-time buys and sells that I'm making, frequent family portfolio update. You got the dividend trackers. You got all other things, including, for example, F15 different stocks that are undervalued at the moment that I've shared with the community recently, which I'm updating as inshallah in the next few days. So you've got a lot of things that you can get your hands on inshallah. And if you join us and you of course get you don't like what you see, then of course you can always unsubscribe inshallah, but I'm sure you would enjoy and you would stay with us. And the company we're talking about today is one of my favorite companies, and this is Qualcomm. Qualcomm is actually a semiconductor company. They are one of the designers, and then of course they also have a patent. So they've got a design that they came up with that other companies actually pay royalties to actually use it and so on. And this is one of the reasons I've always said this should be for example, a wide mode company, but of course for some reason they're not when it comes to Morningstar valuation and so on. As you can see, Seeking Alpha analyst is saying it's a buy, Wall Street is saying it's a buy, and year to date the company is up actually 21%. So it's done really well. For the 1 year it's about 54%, and the last 10 years we're looking at about 131%. I'll share that with you guys basically in terms of the total return over the last 10 years. But before we do that, we'll just move on with the report. So the earnings report that they've actually came up, both top line and bottom line both beat. Revenue breakdown, so basically QCT for example, revenue was up about 8%, $8 billion, and that was about 12% up year over year. QTL was about 1.2, and basically that was of course also up about 3%. Gallons of revenue in the range of 9.5 to 10.3 billion dollars. And then basically the consensus was $9.7 billion. That's what they were expecting. When it comes to EPS, $2.45 to $2.65. And basically what they were expecting was $2.47. So they actually done better both in terms of both top line, bottom line was actually better than what Wall Street was actually expecting. So it'll be interesting to see if they report that, because this is what they're saying they're going to report. And you can find this information if you go to, for example, earnings side of things. You can basically see what's expected of the company moving forward and what they've reported, if that was a beat or base, whatever. So there's a lot of information that you can find through Seeking Alpha. And then just what I've showed you now is you can see here the physical 2024 and Q3. Basically, this is how much they made from handsets. Remember, this company sells the Snapdragon, basically chips that actually go into a lot of the handsets that we use these days. And they go to automotive, for example, which was about 80 million and 800 million, sorry. And you've got Internet of Things, which was basically 1.3. So overall, the total QCT, for example, was about $8.8 billion, which is quite interesting. And of course, in terms of in comparison to this time last year, so basically Q3 of last year, you can see it was 12% up, 87% up. This is still growing, so that's probably one of the reasons. And it was slightly down 8% when it comes to Internet of Things, but this one also overall it was up about 12%, which is absolutely nice to see. And this is something new that they started recently. So the Snapdragon X series solution for PCs is very interesting. So we will see what that brings for the company. So this is sort of a newish, if you like. So they look basically, I'm looking forward to what they report next couple of quarters. We might not see straight away basically what happens, but the fact that they're now in the PC side of things, it will be really interesting to see in the long run. Now let's have a look at the financials for this company. As you know, it's a semiconductor company. Basically right now the company collects they do a lot of the 4Gs and 5Gs, and of course the chips that go into these newer mobile phones, if you like. So the market, basically the stock price right now is $175 per share, EPS $7.71, market cap of $195 billion. They have a narrow economic mode, which I don't agree at all. That should be a wide economic mode. based on that patent that they actually have that's used by other companies. In terms of the beta is 1.26 right now, and we're normally looking for anything below 1. Current PE is 24.7, the forward PE is about 17, and the 5-year average for this company is about 19. So based on that, I feel basically seems expensive, but it's not as ridiculous as some of the companies out there. And yes, basically the sector is about 24 right now. Now price to free cash flow looking 15.8, or just let's call it about 16. This is where the company shines in terms of dividend side of things, 1.85% in the yield, and $3.25 is what you will get for every share of this company that you own. Payout ratio is about 34. Latest increase was 6.3, and the 5-year growth rate of 5%. In terms of growth, S3 basic growth, we're looking about 20 years. So this means this company will become a dividend aristocrat in 5 years time. Aristocrats are companies that have increased to 25 years or more. Dividend safety 80%, so nothing to worry about. And the free cash flow is $12.5 billion of free cash flow right now in the bank. Now free cash flows are very important. Why? Because they use that money to pay your dividends, to pay any debt the company has, acquire other businesses, pay off, all sorts of things. So that's the money the company uses, okay, to do all of these things. So it's important for these companies to have a free cash flow. The compound annual growth rate for the last 5 years, we're looking at about 21%, which is absolutely huge. Free cash flow yield, we're looking at right now 6%. Normally we're looking at about 3. Free cash flow margin of 34%. So really wonderful business in terms, and a well-run business when you look at this as well. 23% when it comes to profit margin, 25% when it comes to return on operating margins, and return on equity, we're looking at about 38, almost a 39%. Return on invested capital of 25%. Absolutely very well run, very profitable business. Now total return in the last 10 years, you'll make about 10%. So 10% pay for your money every single year. Revenue compound annual growth rate for the last 5 years, we're looking at about 13%. The EPS has not actually done well, so I'm hoping that in the next 5 years this will be different. So it's about 1%. Current ratio way above 1, so that means they've got more current assets than current liabilities, which is nice to see. And the next year they're expecting the earnings to grow about 10%. The next 5 years about 11%. As we've already seen, $175 per share is the current price. 180 is basically what Morningstar expects. Is about fairly valued at the moment, which is very interesting. According to Simply Wall Street, as they're actually saying, it's 34.8% undervalued at the moment, which is very interesting. $269 per share. I think at one point the company hit that price. Let me just quickly have a look. I think it hit almost to 200 something. There we go. So the 52-week high was about $230 per share, which is very interesting. And basically that's what they're expecting the company to be. Target price right now for from tip rank is $220 right now, and that's about 26% upside from where we are. It's a moderate buy from them. 217 dollars when it comes to Seeking Alpha, that's £24, $25 if I can speak, and it's a buy right now. Now in terms of Sharia compliance side of things, absolutely nothing to worry about. I really like this. This is kind of interesting, and I think I'll give you exactly what I think overall, but this is interesting. So it has come back. In fact, let me just go back and see what it's done in the last. So it's 11% up in the last 6 months. For this month is only 1% down. That's interesting, and still feels undervalued. The fact that it's actually year to date is up about 21%. Really great company, I'll be honest with you. I really like the business. And the other thing they're doing is that they're buying back their own shares, which is really, really good. So they're not buying it again. Basically, they're not expected to buy in the next 12 months, but they have been buying back their own shares. So they're actually giving you more value to the shareholders by buying back their own shares. You get some dividend. The price is going up. What is the absolutely amazing company. Now, a couple of more things. In terms of the valuation side of things, so as you can see right now, these are the valuations that we got from Morningstar, Simply Wall Street, Seeking Alpha, and I've used the discounted dividend discount model as well discounted cash flow model. All of that basically average $238 per share. $175 is where it's at now. That's about 36% upside from where we are. If we then say, you know what, I want a 15% from basically this company, margin of safety, you can still get it basically just over $200 per share. Now, I'm going to show you exactly how many shares I own. I did actually trim this company. I think I've sold should we check? Because I think I've sold 10 shares, I think it was. There you go, sold 10 shares for £1,600, and that was about the £600 profit. And the reason I did that is at the time, let me see when I actually sold it, how much it was trading at the time. 204, exactly what basically we're expecting here. Okay, so that price basically that we're talking of, 202 anyway. So yeah, I've sold it when it hit over $200 per share. Again, I'm not saying basically I wouldn't add to it. If it has come down maybe to maybe 160ish, if it comes down maybe another 5-10%, maybe I'll start looking and buying a bit more. But right now I'm happy with what I have. I've got 30 shares. The dividends are absolutely great. I've invested about over £4,000. I'm up about 36% or £1,000 right now. So I'm gonna leave it alone because I do have other companies that I feel like I need to build on. Companies like Salesforce, for example, and also at the same time MasterCard. I'd rather buy these companies right now than actually add to Qualcomm. But that's what I want to share with you guys. If you're enjoying this type of content, please like the video, subscribe to the channel, of course, and if you haven't already, please make sure that you are subscribed to the channel. Now, final thing we're going to do is we're going to compare this company with 3 companies all that in the same sort of industry. And what we're looking for is the total performance and sort of total return of the last 5 years or so. So 3 years, Qualcomm about 28%. It has beaten the S&P 500, it's about 25%. And then Texas Instrument about 22%, AMD 33%, and the analog devices about 40, let's call it 48%. Now, in terms of the last 5 years, we're looking about 153%. It has definitely beaten the S&P 500. It has definitely beaten this one and this one, but AMD, of course, has gone. AMD is still growing massively, so it's not the same as Qualcomm. Over 207% in terms of the last 10 years. It has beaten the S&P 500, and which is basically what you normally want to do. But of course, these other companies have done, of course, it's slightly better than this one here. And this one is very, very mature. Qualcomm is very mature. It's been around for quite some time, and I think it's going to be as well. Final thing I want to share with you guys is, in fact, I just want to show you revenue side of things. This is one of the reasons why I really like this business. So $26 billion in terms of about 10 years ago in terms of revenue. Right now we're looking at $37.3 billion. They spend about $16 billion in terms of the cost of that revenue. They've taken home almost to $21 billion. They've, of course, sales and marketing, research and development, all of those things, and then their net income then is about $8.7 billion, which is really good. And some of that becomes then the free cash flow that we've seen. I think it was about $11 billion, $12 billion of that basically becomes a free cash flow. So it's very profitable business. And finally, I just want to show you in terms of the current assets against current liabilities, which is important to us as well. So current total assets, we're looking at about $23 billion. Okay, and the current liabilities, okay, total current liabilities is about less than $10 billion. So they can pay that twice if they needed to, basically. So very well run business, is very good right now. And I will just say to you guys, don't just straight away jump in buying it. If you see a dip in the market, of course, go for it. But always make sure you've got margin of safety. Again, these are analyst information, so you can do your own, discounted cash flow models and whatever you need to do, inshallah. Anyway, I hope you enjoyed the video. If you have, please subscribe to the channel. Let me know if you own the company. Let me know if you're buying it. Let me know if you own any of the other semiconductor companies, or if you have any suggestions for any other company that we can look at, inshallah, let me know as well. Have a wonderful day. Assalamu Alaikum.